We are live, sir.
Good evening, one and all, and welcome back once again to our session, which is the Learn from Masters session. And for today's talk, we have none other than Dr. Debasish Bhattacharya, who is the founder chairman of the Disha Hospitals Group. And Sir has also been the former president of the All India Ophthalmic Society, and also a former editor scientific proceedings. Uh, uh, Dr. Debashish Bhattacharya has been an entrepreneur, and he's given some wonderful talks and tips, and still keeps on giving tips to all young budding ophthalmologists. The first time that we heard Dr. Debashish sir was when he addressed some of the postgraduates at the RIO in Calcutta. And then he was an inspiration for most of the ophthalmologists there, and that's how the interest and the understanding of basic money matters came into being. And without much delay, I hand over the session to Dr. Debashish sir. Over to you, sir.
Thank you, Dr. Saptagirish. Dr. Saptagirish, we worked together for a period of time. It was a very humbling experience for all of us, and Shopto's been a wonderful consultant with us. And now that in today I interact with all the DNB and the fellows of Shankara, it's a proud moment for me because I always like these interactions, as Shopto pointed out, because I like to be in front and facing the future and interact with the future. And thank you, Shopto, for the opportunity. And with these opening remarks, I go to my presentation. So Shopto's asked me to talk on money matters. So I hope my slides are visible, and Shopto?
Yes, sir.
Yeah. So money matters. Beyond your knowledge, beyond your talent, beyond your passion, money is another big resource which matters much in life in what we achieve. So let's talk money and let's be frank about money. The problem with us Indians and our profession in particular, that we are not frank about money. So I'll first give you a few, just a glimpse, a few minutes on macroeconomics. So essentially, it's a marketplace where there is a seller and a buyer. So when this happens, there is a transaction, and the seller pays money or credit to buy goods, services, or assets. I hope you understand what goods and services and assets are. And this is a linear stuff, and it depends upon the population and the ability of that particular demography and the geography as to how energetic they are. The linear graph could be more. If they are lazy, the linear graph could be less. So this is called which progresses linearly, and this is a linear graph, and it's a productivity growth. So then there are the money things which come in between, that the central bank, that is the RBI in our case, they actually control the market by two main means. One is they regulate the interest rates, the repo rates, as you must be seeing in the newspapers. So if the repo rate is low, they lower the repo rate, so there'll be loans are cheaper, more loans, more. So people buy more loans, they buy assets like housing, etc. And they print money. The printing of money depends on two things. It requires a sanction of the parliamentary committee, the government, so to say. And of course, it requires our stockpile of gold. So essentially, and as you print money, you invite a little bit of inflation and you pump in liquidity. That is, we have money in our pocket. So that is liquidity. Essentially, the central bank feeds the financial system, so the banks can freely give loans at a lower rate, and the demand goes up. And if the from the buyer point of view, and the supply also takes a boost, because both the seller and the buyer accesses these loans at lower rates. So the banks also earn, because the interest, through the interest, and of course the principal recovery always goes on. Now here, since we take loans, I would say the bank is never interested in taking the principal back, because if they take the principal back, they have to look for another customer to invest the money. So they are interested in the interest part of it. So this causes a cycle. So what happens is, when the interest rates are low, so there is a boost in economy and the curve goes up. Then we will come as how the cycles are formed. So the moment a loan is created, we have an asset for the person who gives the loan and a liability for the borrower. So from thin air, essentially assets and liabilities are created. Now there's something called the market sentiment. So when you lower the interest rates, the market sentiment should be positive, because there should be more financial activity. Now let us understand another small little thing, that somebody's expense is another person's income, because the more we spend, the more somebody earns. So this is how it translates as a wave down to the entire economy. So this is how things happen. And but what happens is, if we have too much of borrowings, too much of liabilities, then we start becoming cautious. Oh, I have so much loan to repay, so no more spending. We cut down on spending. And this is the start of the recession, the down curve. So essentially, what happens is, this is a short-term recession. And these cycles usually happen in a time of 5 to 8 years. I'm putting this very simply just to understand what macroeconomics is all about. Now, the government also, through their policies, suppose they are liberal on FDIs, suppose they say that in the financial sector or in the insurance sector, we are allowing 70% FDI. So the moment they say that, the insurance sector takes a boot, because the foreign investments come. If they get ownership, they would try to invest more. So similarly, by regulating taxes, if you raise the tax customs duty for a particular product, there will be internal production or there will be less consumption. So this is how macro factors, government controls the, through their good regulations, control the economy. Then there are environmental factors. The biggest example is COVID. The other things were, there could be floods, there could be famine, there could be cyclones, there could be so many other things which modify a particular geography and make it susceptible to, the market forces. So there could be labor unrest, all this, triggers wars. So all this triggers, the market. Now, governance. If you have good governance for a long duration of time, it could really have a very positive impact on the economy. So, and then of course the demography. If you consider, just as a bigger example of Europe, Europe is getting older, so the demography is getting older. So essentially, the economic activity may become a little slow. So these are macro factors by which we get the bigger things, that is the long-term growth or the depressions. So these are big cycles, and that's how the macroeconomics works. So just a few points, I mean, to begin with, an opening note, keep it in mind. Now let us come to, this brings us to when should you do what? Well, when should we do what? You would say that, first thing is you have to learn, work, create a brand value. Let us understand that within a hospital, there is a hospital that surrounds us, that surrounds the individual. So the staff, everybody, they look to a particular doctor, and they that is an internal environment. So we create a brand value for ourselves. So you are working in a hospital or with a, maybe associated with a senior practice, and this association will go on for 1 to 6 years. Then we can, during this time, we can start our evening clinics if the hospital or the practice provides. And then you can go to the surgery center and operate your surgical cases. It can go till the age of 40. I think at the age of 40, one can actually start thinking of starting their own setup. I'll give my reasons for that. And once you've started your own setup, then you need to collaborate. We need to collaborate with our fellow practitioners and, get the thing moving. By starting my own setup, what I mean is you have created a value for the place, a value for your practice, which will continue much beyond you. So essentially, the difference between working in a hospital and having our own setup, probably you would seem that, why am I doing so much or working or brainstorming myself so much? But the end of the day is the satisfaction and the value that you've created, which can create perpetuity. It can create perpetuity to continue. That thing that we have created will continue beyond us. So that is the most interesting point. And then you start collaborating, and you can form group practices, which I did at a certain point of time. And then in an individual practice, we will come out to how you can phase out your practice. So every practice has, is limited by its proximity. So where is very, very important. So it must be having, most of our patients are, cataract is still our butter. And so, elderly population, a growing elderly population, and because we are in private practice, we must know that it should be a paying area, and with young people to support. So maybe, Bangalore, yes, it is a good place, but there are too many young people who come from outside. So essentially, that population is out of the domain of private practice. LASIK, yes, but nothing more. And obviously, when you choose your place of practice, the place should be expandable. Like if you have hired one floor, or there must be a floor above, which you can actually, because over time, that place of practice is going to become the icon, and the building itself becomes a brand. So it should be accessible, it should be very visible, because you cannot actually advertise. In our profession, advertisements are not looked well. And possibly the best opportunities lie in underserved areas, and cleverly or intelligently, even in cities, if you can choose somewhere close to a retiring practice, you can benefit out of it, because as the practice retires, you can have those patients into your clinic. Now, as I was talking about demography, let us see Let us pick up randomly 2 states because you are young. You can choose to be in Bihar, you can choose to be in Madhya Pradesh, you can choose to be in Karnataka, you can choose to be anywhere. Now see, here the young population are saying in both these states, and I have taken an age group of the elderly population between 40 to 54 because you have to look prospectively 10 years from now. Here we find a striking difference of 7% difference between Bihar and Tamil Nadu. So there will be more patients for cataract in Tamil Nadu, and Tamil Nadu is going to do well for the another 20 years so far as ophthalmology is concerned. So this is how they say that there's more cataracts in Tamil Nadu. Now, another thing that we need to analyze is the affordability. Now, I would equate what is the, the per capita of India per month, which is important. So you see, it matches with the IOL that we consume. Almost a 50% of our IOLs are EMMA, 20 lakhs and all that. This slide is there as a reference. And what is interesting is this blue one, where we locate most of our practices. So our practice, if it is on this side, we get 90%, maybe 40% plus 25% of the 50%. But if you keep it at the violet line, you would be playing with only 10%. So you have to decide, we have to decide where we want to place our practice. It depends, of course, on the location. That is how location becomes so important. And we must understand that, affordability is a very important aspect of the whole practice scenario. So often, when we start a practice, we would like to address this question: what does the patient want? Well, frankly, the patient wants everything. But so it is probably not the best question to ask. So the best question probably is, what is the patient willing to pay for? And that is what money matters. So ask this question: what is the patient willing to pay for? And then we can start incrementally. I will come what is the paying abilities and stuff like that from affordability. So we must first attend affordabilities and then excite them enough so that they can go into more aspiring visual result areas. I'll give you a simple example. Like if we operate 6669 cataracts, it is perhaps good for the practice, but it is also good for ophthalmology, because if we make a 6669 patient happy with the cataract surgery, the patient are going back to the community will send another patient who's probably having glaucoma or diabetic retinopathy with 66 or 69 vision. And that there lies the importance, because then we treat a glaucoma early, we treat a retinal disease early, which is most important. So having said that, let us just get into a profit and loss thing of, this is the basics and the fundamental thing that I wanted to tell you here. These are, I hope these are being recorded, so you need not go into the jumble of these figures that I've written down, but I just did this calculations for a young practice. So it has to be everything what you spend, like there is an income, there is an expenditure. Every head of the expenditures, like you see, have been included. What I have taken here is, don't try to follow the figures. You can see it at your own sweet time. So, I've taken a doctor who's seeing 5 patients in the OPD per day in his clinic, 10 patients, 20 patients. and he is charging 300 rupees per case and per patient, per consultation, and with a 7% conversion to cataract surgery, which means 15 out of every 15 patients that he sees in the OPD, one probably agrees to a cataract surgery. Now, it is a tall order for a new practice. I have put in Disha's figures. So that is how you would see that even if you see 5 patients, you are probably having a monthly income of 72,000. So that is quite sensible for a beginner. But and as you do better through economies of scale, of course, we will come to economies of scale in a bigger scale where it will make more sense. And you can earn up to 1.75, even up to 4. So that's the good point. But would we really ask you to go for a surgery center here? No, sorry, I think the surgery center, I will explain you, because here the catch thing is that what are we spending for giving to a surgery center for operations? That is calculated at 6,500 rupees per case. So until you hit an area where your cost of that, your own surgery center has the numbers by which you can get 6,500, the surgery center has to be good because it's a lifetime thing that you're going to do. So essentially, when it comes there, that's why critical numbers are important. And when you get that, that's why. And I generally put it at around 30 patients per day. That is where you get the kind of numbers which would justify that. So having said that, you must also have a balance sheet. You must know these things because a balance sheet is simply put what you own and what you owe. So on the left side, you have what you own, and the right side, you have what ulto, I'm sorry. On the left side, you have what you owe, and the left side, on the right side, you have what you own. So essentially, these are the heads. I'll explain a little bit when we ask the questions. So essentially, you see that it's a private limited company's heads, and so essentially, we try to it should always balance. Now, there are certain points I would take about understanding a balance sheet. So since the slide is not big enough, the balance sheet, as you must be seeing, comes in 10 pages. So essentially, I'll try to briefly touch you on these points. So the share capital is the initial capital or the paid up capital that we bring into the business. Now, the reserve and surplus is generated by adding the profits. Now, any loans and borrowings, which this goes on the what we owe. Then the sundry creditors and are what we own. Sundry creditors, because we have to pay them. Then there are the other current liabilities like advance from patient has paid the booking for surgeries. There are ESI payables, GST payables, salary payables. So these come under liabilities of because a balance sheet is a one-day snapshot of a particular company or a particular person or a particular enterprise. Now there could be short-term borrowings from a bank. There could be long-term provisions for income tax or provision for dividend, because income tax you pay quarterly when the tax liabilities become more. Then are the assets. So the tangible fixed assets like land, building, equipment, ambulances, furnitures, fixtures, then the capital, which are under construction or set up, installation, then tangible fixed assets, assets which can be seen or feel or touched by those values can be realized. Like this is goodwill. This is a very, intangible area. But these also can be determined, because when you see a 5-year thing, you can understand how is the business doing and what is the goodwill created. Because generally for every industry, there is a nature of growth depending upon how the profession, ophthalmology, like in COVID times, we are not doing well. But other disciplines are probably doing well. Internal medicine, multi-speciality hospitals doing well. So these create the goodwill value. The financial investments, FDs, so these are all the heads that balances. Now, if you were to just calculate grossly that what is the net worth of the share capital, or the value of the shares. So you just add share capital with reserve and surplus. This gives the net worth of the company. Now you divide that by the number of shares, you give an idea of how individual shares are valued at. And if you divide it by the profit, you get the earning per share. So these are simple things to understand. Don't focus too much on the business perspective or these financial aspects, because yes, we need to understand, but it is not as complicated as you think it is. Now let us take and come back to the surgery center. Now here we are taking a practice where we have a fixed cost, which is a 75 lakh investment on, say, about 1,500 square feet of building of OPD area, and a 25 lakh equipments invested in an auto ref, NCT, indirects, lenses, whatever. So a very basic setup of a thing. And then we have taken the staff, maintenance, stationery, housekeeping, electricity, etc. at almost 1 lakh, 1.25 lakhs per month. So that is 15 lakhs per year. So see how economies of scale work. If you are seeing 30 patients per day, your cost of the OPD cost taking these things are 582. And so you have to charge 600 rupees as your fees. Otherwise, it doesn't work. Now here, let me say another thing that, these are macro points. That suppose you want to do a surgery center, which have come just now, then probably you should not have an OPD, because then if you start an OPD and you are practicing, the other doctors are not, they will hesitate to come in that surgery center. Otherwise, the other doctors, the younger doctors will come to that surgery center if it is just a surgery center. So this is how, if you are seeing 100 patients a day, then you can jolly well charge 300 rupees and you are still profitable with a doctor's fee of 150 rupees going into the doctor's kitty. So having said that, let us now, go into the investigations. Now, please understand that this area is important, because this is taken from 12 lakh patients that we see every year. So essentially, how many of them, so like if we are saying 12 lakh patients and we are saying that out of every 10 patients, 1 patient does OCT. So we do 1,20,000 OCTs. So this is how it is calculated. So if you see that the patient to be seen for one investigation, this is very critical. So we can rely on this, and we have given you the calculations, what is the cost of the equipment, and I have calculated this, that equipments keep on changing. You need to have a profit to change the equipment, and at the same time, you need to profit also simply. And so I have kept the recovery at 3 years, and the next 2 years I've kept for profit. So essentially, this is about the investigation part of it. And now if we come to the OPD charges, now here you see that when you are doing 1,300 surgeries, and that is why I insisted that at 20 patients a day, you will not hit that sweet spot. Then your cost comes to 525. And if you are paying 6,000, 6,500, then you tend to create some surplus here. Here you don't create a surplus if you are doing around 500 cases per year. So essentially, these are stages of practice that we need to understand. These calculations I have done, but you can do your own calculations because it depends on the place where you are practicing. What is the requirement? Maybe you have to speed up one, go slow on the other, and all these permutation combinations. But what is important is do have every transaction put in proper perspective, which can have financial, which makes financial sense for you all the time, so that you can see how the practice is doing financially over a period of time, and how that would translate in the future over a period of time, so that you can make a financial planning. So it is very important to put everything in the profit and loss, a very good PL account, as I told you. This needs to be done very well. Now, having said this, suppose you are earning 3,86,000. So what after this? After this, here, definitely you have a very small equipment investment. So after that, you add depreciation of that equipment, depreciation of the building, which is at 7 or 10%. Equipment, you get 15%. So depreciation is not in the account, but it is not in the money format, but you can actually win over the depreciation, and then comes the profit before tax, then you pay tax, and then you get the profit after tax. Now, obviously, you in a practice, you would always take your income as an expense. Like here, you would see I have included the telephone charges, your transport bills, the academics investments, or any other things. That these are all which can book. This is from a tax perspective that I'm trying to tell you. So we were somewhere here talking and explaining about the cost of establishments as to how many patients in a cataract surgery center. This is a simple cataract surgery center where you have a phaco machine and a good microscope and a good operation theater for operations. That kind of a setup, nothing very elaborate. Now, essentially here again, I have again focused on the affordability part, and then I have seen that how much should be the pricing of your surgery. So suppose I have assumed that a doctor needs to earn 7,500 for the surgery. And obviously, when we add packages, suppose the basic lens that you're putting in costs 2,000 rupees, a hydrophobic Indian lens. But if you are using higher lenses, always keep this profit margin, because then it becomes, otherwise you don't have the handling costs. So essentially, that's how I have come to the pricing. Again, you see when you are doing 100 patients per day, or 1,300 surgeries, you can afford to charge 24,000 rupees, giving a lens of 6,000, which is a good lens, maybe a Technis or an Alcon Acrosol. So having come to this, I would discuss a few practicing points. I mean, how do you actually price? Most of us end up doing shadow pricing. So shadow pricing, what are the shadow pricing is not perhaps the right way to do. How do we arrive at pricing our services? I would put, if you put 3 times the square feet cost of the residential area where you are practicing, suppose the residential area is 7,500 rupees, you can put it as your base price 21,000 rupees. That's what I mean by this one. And the segment we want to serve. One thing is very critical, that the staff can avail the cost of service. Then is it should always be prospective, because we should price our surgery so that there must be surplus and there must be enough invitation to affordability and at the same time invitation to aspirations. It must be realistic, and this must be based strictly on fixed cost, variable, semi-variable cost, variable cost. Now, what is a semi-variable cost? Semi-variables, consumables, yes, but electricity is also semi-variable. Like some add-on stuff will be semi-variable. The more you operate, more people you require. So you have to titrate that, and the doctor's cost and profit. So another good rule to follow for pricing is the 1 day per capita can be the spend in the OPD. So suppose where you are practicing, majority of the people have a per capita income of say 1,000 rupees. So you have to think that if I keep my OPD charges at around 300 rupees, then the patient can come, buy their medicines, pay for the investigations, or do whatever has been and comply everything that has been advised in the OPD. And for the surgery, we would say 1 month per capita, meaning per person's earning. It is so if a family is earning with 3 members, it is earning 1 lakh. So the per capita is around 30,000. So you can put the cataract surgical cost at around 30,000. This is the thumb rules that I am trying to tell you out of our experiences, what we have gathered. Now, mind you, any discounts, you're giving discounts in the pharmacy, in the spectacles, or you giving a discount to a poor patient, whatever, free services, training, which is not being utilized in the practice, not being utilized, like Shankara is doing a wonderful job by training so many of you. Now, this is a huge cost, a huge thing which you must realize, because it is for Shankara, of course, it is of course, it is invested in a very noble cause, but it is an expense. So obviously we understand, lower the price, better is the compliance. So let us understand this one fundamental thing. And then, when it comes to a bigger setup, like maybe a center which sees 150 patients and does about 2,000 cataract surgeries a year, these centers would have a rule of 20. I mean, I simplify it like that, where 20, I mean, that would, suppose if you have invested 5 crores in that hospital, so within 3 years, you must do 5 crores. So whatever, if you have invested 100, you must be doing 100 in 3 years' time. And the rule of the thumb is that 20 is for infrastructure and equipment, 20 goes for staff and maintenance, 20 for consumables, 20% for doctors. You may say 20% for doctors. Oh, that is too less. No, I'll tell you that that is not too less, because there is a 20% profit. In an individual practice, club this two, it becomes 40. Now, if you add a little more, it might go up to 50%. So that's what most of the practices do, anything between 30 to 50%. Now, another in a bigger setup where you have lasers, everything. So that is what you get. That, but one thing from this is that the sixes rule, that is 60% of our revenues come from cataract surgery. 6 comes from OPD, 6 comes from investigation, 6 from pharmacy, 6 from spectacles, 6 from injections, 6 from retina, and 6 from other surgeries like glaucoma, oculoplasty, etc. Of course, as we saw, prices can be affordable through economies of scale, and cost can be reduced by converting fixed cost into semi-variable cost. This is a very interesting point. Suppose you are taking a rental model. Now, in the rental model, if you talk to the person who owns the premises and say, sir, I am a doctor and this is my practice, that is why I say you need your profit and loss, you need your income tax returns, you need your balance sheets. You show him that this is the way I'm growing, so I will grow further. And so you are saying you want 50,000 rent on these premises. Why? I'm just beginning, sir. So would you charge 25,000 rupees as rent, and I will give you a top line share. So this is what I have planned. This is my project report. So you might even earn up to 1 lakh. Instead of 50,000, if I do well, you earn up to 1 lakh. So generally the sharing mechanisms of infrastructure in ophthalmology, it is not a very common practice. Restaurants and stuff like that operate through that. That comes to around 7 to 10% of the revenue, total revenue. So equipment on hire purchase is another way, which is a common practice, bundling with lenses. It is not bad. And of course, like when you are letting out your OT for other young people to operate, you are actually converting your fixed cost into semi-variable cost. So there are even hiring part-time doctors, part-time high-value staff on variable pay and incentives are other efficient methods of converting fixed into semi-variable cost, because that is a real game changer. And prices should be incremental. If you feel that most of the practices are struggling to bring in femto or the multifocal lenses, because the patients have probably been accustomed to a 20,000 cataract surgery or a 30,000 cataract surgery in that center. Now, suddenly, if you start talking 1.5 times, 2 times of that cost, the patient's been referred by another patient who has given that price code to the person who is to this patient who is come. And now, if you start talking anything which is 2 times the cost of what he has in mind, then it causes a question mark in the patient's mind. Now, let us touch very briefly on the loan side, because you say probably, oh, nobody gives us loan, but that's not a fact. I will tell you, these loans are freely available, and especially now. So the small business banking loans, so you can have a term loan up to 5 crores. And you have to have these turnover receipts. That's why I said that the balance sheets are important. You can have a snapshot and look into them. These are the 2 most important things you should look at. Loan against security, LAS or LAP, loan against property. You get around 70% of the valuation in terms of loan. And what is this loan about? It is usually given at around, today, the current rate would be around 8%, 8.3%. So these are important aspects. So now let us come to a little around taxation. Here I would just say, there is a new tax regime which has been introduced, and there's an old tax regime. So there's not much of a difference if you take all the benefits of the whole tax regime. If you, because this applies only if you are in that 10 lakh income bracket. Once you go earning beyond 12 lakhs a month, these things don't, 12 lakhs a year, that is 1 lakh per month, it doesn't make much of a difference. Now, I will tell you what briefly, because it is important. You did not hire a chartered accountant. You can file your own income tax returns, which I insist is the first exercise you can start doing right from now. So, even the computation is very simple. Like somebody is earning an income of, say, 8.5 lakhs. So, for 7.5 lakhs, he gives 10%, that is, he gives 75,000 rupees. And for the remaining 1 lakh, he gives it at 15% here in this bracket, and he gives 15%, 15,000. So his total lakh is 90,000. Now you can deduct TDS. Now, suppose you are working as a fellow, so you have a Form 16, so, and if you have other savings and life insurance and other things, so you can prepare your Form, you can deduct your tax which has been paid by Shankara, and add on the other things and pay whatever little return that you have to. So these are very simple computations. Now, what are the benefits? It isn't very big, those in the old regime. You get 1.5 lakhs for your insurance. So obviously you must take, 1.5 lakhs comes from investments in LIC. So you can spend this much for insurance, and another 50,000 rupees is allowed yearly for the national pension scheme. So the total is 2 lakhs. Another 25,000 is for insurance of health. And for your parents, you get an insurance of 50,000 rupees. So total 75,000 deduction. So all in all, it is a 2.9 lakhs of no tax to be paid over and above. If we go to the back slide, 5 lakhs. So 5 lakhs plus another 3 lakhs, that's about 8 lakhs where you don't have to pay taxes if you follow this. And I would say you follow this, because I'll come a little bit touch on the wealth management side. And then I would explain you about the other things like the mutual funds, the short-term capital gains and the long-term capital gains. What does it mean? Short-term capital means land and property. If you have sold in less than 3 years, you bought a flat, sold it within 3 years, it becomes short-term capital gains. Equity and shares up to 1 year. Within 1 year, if you sell, it becomes short-term. Mutual funds up to 3 years, and it becomes anything you sell before 3 years, it becomes short-term. Long-term, it is 10% plus indexation benefit. Indexation is a inflation-adjusted thing. So for the last few years, it is being around 3 to 6%. So eventually, if you add 3 years, this whole thing may be tax-free. So this is property and mutual funds more than 3 years, and equity shares more than 1 year. Short-term capital loss can be adjusted with short-term capital gains, but long-term capital loss, because you will lose money also if you are going in share market or even in mutual funds, and they can be adjusted. So these are the basic tax structures, not very complicated. So the first step I would request that you at least do your income tax filing on yourself. Wealth management, I would say, for the first thing, don't invest in property because it doesn't have liquidity. First thing, we see that a doctor buys a car. I think Uber is much more efficient. Like you saw, working or operating in a surgery center is okay till you have at least 1,000 cases operating per year. If you are not operating, it is not profitable. So similarly, it may be your dream to own a car. You may go ahead with that, but I would not advise. So property, cars are probably not to be invested. What I would rather say that you invest in these two things. Have a pure life insurance. Don't go for this ULIP thing, because I will show you the same money you invest in SIP, you get 3.5. So if you take a combination of this policy and the balance amount you add in a SIP, you will get much more returns. Here, what I'm trying to say is, here, if you die at the age of, say, the policy term, if you die at the age of 75, you get this, your family gets the money. Otherwise, if you die at the age of 80, you don't get any money. But that's fine. This is only for insurance. So definitely have a life insurance, and you can invest in SIPs. Now, the other thing that I would say is definitely have an insurance cover, and this is for your family. And also have top-up policies, because suppose you take this one or even a smaller one, maybe for 15 lakhs, and you top it up to 1 crore, you will probably spend 40,000 for a policy of 1 crore and get a lot of benefits. So explore these policies and do a proper wealth management. But as an entrepreneur, do understand that wealth management is only about life insurance, getting a health insurance. Rest of it is in the business. Keep investing in your passion. Keep investing in where you believe. So that is what I'm trying to say. Don't look after these. I'm just giving you a thing like you can park your money in, if you have some money, you can park it, because these are absolutely non-taxable instruments, like they are always in the short-term tax benefit capital gains, long-term capital gains. So, and these mutual funds, again, as I told you, you get tax benefits. And of course, you can do equity, but be very careful when you do it, because these are volatile, especially in the mid cap and the small caps. They should be, you have to stay put for a period of time. And if you are not willing to stay the course, don't do it, because it's not, day trading. That is a horrible thing. You will always lose money. You can never time the market that way. So these are a few words around this. Now, the last part is phasing your practice. So start thinking at 55. I think this is a premature talk, but I just share you because I want to share a very interesting model here. You partner with a youngster which is of 35, maybe from the age of 30. Now he has worked with my practice for 5 years. I know he is a good chap. We agree on a lot of things. And so while there I start disinvesting, while the newcomer continues to buy into my practice, the senior keeps on selling, and it goes up to a 50-50 situation. A 50-50 is a joint venture. So this we did with practice. Recently, we formed a limited liability partnership. It is a 20 years practice. The doctor is 55 years old, and the Disha holds 50%, and the practice, the doctor holds 50%. It was a 3.5 crore turnover practice. We didn't contribute much. He was interested in the brand. He has another 10 years to invest. What he was finding it difficult was to get a doctor associated with him, and we found a doctor who was willing to be, and we are the facilitator. So this is how it went on. And now what will happen is when he retires at 65 or whenever he decides to retire at 60, at which age, he keeps on getting 50% of his profits, his family, throughout the life period of the company. Whereas currently, we are getting the benefits of his 20 years of hard work and the infrastructure and equipment that he has created. Now, how do we value practices? The thumb rules I'm telling you is usually between 2.5 to 3.5 times of the top line of the revenue and 10 to 15 times of the EBITDA, that is the profit before tax and depreciation. So assets are always calculated separately, or it's a mix of both. So I mean, it is a different chapter where I need not take you straight away at this point of time. But you must have a few thoughts about good practice. One thing I would always say that the promoter, who is the change agent and talking, must be preferably the eldest, the most skilled, the most resourceful. He must be having the biggest practice, and a friend or senior dada in college, some sort with the other members, because you need some working relationships in difficult times, and the concept should be approved by your family, by the better house. And there should be a controlling stay, preferably by the change agent, because there would be periods where difficult calls have to be made. So with these words, I come to the end of my price. This is always everything that you do must have an ethical point. And so I would say that we should not be charging for complications. The billing of IOS should not be on MRP, but on profit. And of course, 10% discounts on medicines are expected. So ethics of pricing is most important, because what we transact is not money in our business. What we transact is faith. And this is a faith not only with our external customers, that is our patients, but with our internal customers, which means our staff and our doctors, because it's a very small community. Even if we think that ophthalmology is huge, it is not that huge. So you know me, I know you all. So this is what it is. And one thing, let us all remember that cost is the first step to quality, meaning that we must first attend affordability, keeping quality in mind. And when we attend that, in the process of that, we will definitely keep incremental, we will definitely make incremental improvements in quality, and this further improves cost, as you have seen. And so please don't have this pre-notion that low cost means low quality. No, it must take the first step. And if you are little hesitant about practice, I would say take the leap. I've shown you, and it is there, I think, recorded. Go through that. You would see the target would be to earn your first month's salary, which you get working in a hospital, only that much, or maybe even slightly less in your practice for the first 6 months. You take that much of a risk, I think, and let us build it brick by brick. So don't immediately jump into something big. Don't think of buying big equipment. Buy equipments which are functional, good, and reasonably priced. So having done this, I wish you all the best in your years to come and your life in future. Thank you very much for the wonderful audience that you gave me. Thank you very much.
Thank you very much, sir. And it's been a wonderful talk. Actually, the entire talk has been something like a revision or a recap of the entire training that we had in our MBA times.
Right.
So, so it was wonderful, especially starting with the macroeconomics and you did touch upon the important factors that actually now every ophthalmologist actually should know about. Perhaps these topics is also relevant for every DNB and MS student also, because ultimately they will either end up joining somebody else's practice or they may start their own practice. Now, what happens when they start their own practice is that they just caught up in a whirlwind which they don't understand most of the times. So I think these small primer tips is very, very important for them to understand the basics of, to understand money basically, because that is something that is never taught to us either in medicine or even during our postgraduate days.
Yeah.
It's either we see somebody and we emulate them and we hope that it works out for us, and it's either an all or none situation. But now with times changing, we don't have to be at the mercy of a chartered accountant or let's say a typical non-medical MBA person who doesn't understand many things. So we don't have to be, mercy at marketing people too. So of course, I'm sure you've not touched the marketing aspect of practice, but this is what is the basic economics that I think every ophthalmologist should
I
know.
think youngsters are very apt at digital marketing. I think that is something which is the next thing. And, please understand that the DMUs are going to be the children. When the parent gets operated, who's going to operate, what operation, the decision is taken by the children. So, and they look forward in the digital space. So, and that doesn't cost much. So I think I would make a sincere pitch to all listeners going through this lecture that focus on digital marketing, which is very inexpensive. We have a question from Akshay Saptagirish, who
Yes,
says
sir.
that which is wiser to do when to start your practice. As I said, you must have sufficient bandwidth to see that you would have 10 to 15 patients in your practice. And definitely, in the fix on your location where you want to practice, and then choose your area of work, because of the brand is a local value. So you cannot carry a Bangalore brand to Calcutta or a Calcutta brand to Bangalore. So decide where you want to practice. And then when you have that kind of following, start creating in the hospital. That's what I want. That, our doctors should work for their own brand. Be on the patient side. Don't try to win too much for the hospital, because in that you would be serving your patients so much better. So when you get that number of 20, I think that is the time you should start thinking that I can start your practice. And when you start your practice, start it small, first the clinic, then the surgery center, and then the bigger center. So it is a 20-year span. Don't hurry it up. I mean, there are no shortcuts. And if you ask me, what do I get by doing this whole exercise? You get perpetuity. As I told you about at the last, that we associated ourselves with a single practice. And what it gets is that hospital will continue forever. We kept that name also. We just added Disha to that name. It's become Disha Drishti Eye Care Center Foundation. So Drishti is very much on, and it will continue beyond Shobhushachi Ghosh. Disha will continue beyond me. So this is the whole exercise, the perpetuity of things. That is the extra that you get out of doing so much. And of course, the satisfaction of creating a new thing. And of course, as I taught, he also goes on to ask that purchase of all instruments. This you have to decide upon your resources. I mean, it is always better that if you have money, definitely buy it through the money. I mean, yes, someday you must keep to fall back. Suppose I would say 50% of your resources should be kept for difficult times, and 50% you must invest in the practice. The best place to invest is in the property, because that appreciates, and instruments you can take in EMI because that depreciates. So you can go through the bank, and they easily fund instruments rather than they funding property. So, and the third cost, would the cost differ significantly? No, it does not. Suppose you buy some equipment uh, and you have spent some, or a property, and you've spent some money. So that would appreciate, as I said. So essentially, if you are a good wealth manager, then and you are a good entrepreneur, it's a balance of that. How much would you earn from wealth, and how much would you earn in your entrepreneurship? So it's a balance of that. So essentially, cost doesn't differ. It depends on how well you invest your money. So you can take a loan, or you can invest from this, but keep a cushion, keep a 50% cushion. Yes.
And sir, one thing I was, when some fellows keep asking, is that if they were to start a practice of their own, two things they're always confused is more whether to start in a big town, or town or big city. So it's a small practice in a big city, or a decent practice in a small town. So that is one
Well,
question most of them always keep asking.
true. It is also a very personal question. But if you want to grow quickly, you have to go to an underserved place. I mean, you can grow much more quickly. Second, when we are young, we have some skill gaps, at least some art gaps. Like, you don't know how to talk to a private patient. Of course, these skill sets are implied, and I am very sure in Shankara you all get it very well. But having said that, patients are much more forgiving in a less served area than in the city. In the city, it is very competitive. So, the next person sitting, say, within 500 meters must be a exuberant practitioner. So he is your competitor. But also understand that, don't think that the cities are all too cramped, because for that big practitioner, or most of the city practices that I have seen, they don't address the urban lower middle class. So as a beginning practitioner, you could focus on that. But I would always say, if you are from a small town guy, because the other logistics become more important later in life, the child education, etc., etc. So you can actually stay in the city and have your work in an underserved place with a travel of 50 kilometers day for every day.
Well, exactly. Yes. Thank you very much, Dada. I think there are no more questions, and it's been a wonderful, wonderful talk. Of course, this talk it's been recorded, and it'll be on our YouTube channel, and I'm sure all of them will be watching. Of course, today being a Saturday evening, most of them are actually relaxing, but not the way they would want to do in the pre-COVID times, though. So, thank you very much, Dada.
Thank you.
It's been a wonderful, wonderful talk. I really enjoyed every part of it. And I'm sure all those who will be listening will also keep it, and they'll also be going through the slides multiple times to see how these formula work. And it's been wonderful, Dada. Thank you very much.
Thank you. Thank you.